let's talk about the IT space, because today there was a negative news flow on Infosys, but the likes of TCS, Wipro, they are doing well today.
Well, yes, as you were mentioning, that IT sector is on the lens, and a couple of trends that we are noticing. Firstly is the fact that in today's trade also, if you see, Infosys is the only stock in the Nifty IT index to trade in red, and also on a YTD basis, that is the only stock which has declined around, if you see what we are gathering here is the only stock in red, and it has declined around 2% on a YTD basis. But it's also the mid-cap IT stocks that have outperformed. To explain all these trends that we are seeing and why Infosys is down, we have Anisha joining us to give us all those details.
Sitting at a 19-month high. So after those slew of downgrades and guidance cuts coming in, it seems like maybe we are towards the end of the cycle. At least that is what stock move is telling you. Today, of course, Infosys is coming under pressure on account of the specific issue pertaining to the exit coming in of the CFO, and more importantly, the slew of exits that we have seen over the last 15 days. But if you look at a Tata Elxsi today, or a Happiest Minds, or even other names from the broader market, the IT universe, that is, all of these stocks are outperforming, and that's been the key trend across this year. I mean, if you look at the YTD moves of this year, you will see a persistent which is up around a 70%. Even other names from the broader markets, the likes of Tata Elxsi, KPIT Tech, have managed to scale up quite well for themselves this year. In fact, Coforge was up 50%, L&T Tech high by 35%, Infosys on your screen high by 24%. But if you look at the other column, there you have the large cap IT names. Infosys down 2%, Wipro a paltry gain of just around 8%, TCS and Tech Mahindra too have managed to eke out gains of around 10 to 20%. Tech Mahindra, of course, on account of that leadership change, has seen better performance than rest of the peers, but the frontline index and the frontline stocks have been languishing, and the reason is the clear underperformance that we have seen in terms of growth. The growth has been reported at pretty much flat to a negative bias as well in the quarter gone by. Guidance cut has been there across the board, and the commentary from the management is also weak. They are not pointing to any recovery timeline, and that is what is worrying the street as well. And also, given the scale and size, they are a lot more, a lot more elastic to the US recession. So that is something as well which has been bothering all of these large cap IT companies. On the flip side, if you look at the mid cap IT companies, they are all in niche verticals. For instance, the auto ER&D segment is one space that has fired away this year, and you also have the robust growth coming in. Most of the companies have reported anywhere between 3 to 7% kind of quarterly CQGR as far as the IT companies are concerned. So you see this big disparity in the growth rates of the two verticals. You also have the diversification coming in for a lot of companies, and that too has augured well. On the valuation wise, it should stack up for you on the screen. By no mean feat the mid-cap IT is trading cheap, but the big call is that the mid-cap IT will continue to trade at expensive valuation because the growth is strong, and secondly, a lot of these companies have reached the size and scale that they can now start bidding for large orders as well. So these boys are turning into men per se, and that's why we are seeing big re-rating across the mid-cap IT sector. Back to you guys.
Well, thank you so much, Anisha, for explaining what's happening in the IT space. And definitely, given the outperformance, like you rightly mentioned, boys are now turning out to be men's. And with this, let's go across to our experts to understand which are the stocks that are on their radar, as well as their take on the IT space. And Sneha, coming to you, because Anisha just tagged up the valuation perspective, the large cap versus the mid cap. So given this point, the large caps have been an underperformer, but do you believe that now is the time, because the consensus call is to get your exposure more into the large cap space, but will you be bullish in the large cap IT space?
Hi, good morning. Yes, we are bullish on the large cap IT space compared to the mid caps, and the main reason is that these large cap companies, the kind of deal wins that they have seen in the YTD of FY24, so that should actually start translating into a bigger volume for the companies in FY25, and that should be turning point for the companies, because then that would start translating into the revenue. And moreover, the valuation comfort is much higher in tier 1 companies compared to the tier 2 companies. The current valuation, like if we look at that along with the dividend yields that these companies enjoy, especially the large ones, obviously it provides us with a lot of comfort in the bigger names. So we continue to stick with the tier 1 names, given their growth outlook for FY25 compared to the tier 2 names, as well as the on the front. So we prefer TCS because TCS has been benefiting disproportionately as its clients are reprioritizing the overall cost rationalization and efficiency driven projects. So and in that segment, TCS has got its main forte. So TCS would be benefiting big way.
Well, thank you, Sneha, for that. Kunal, how are you seeing the IT sector and what would be your top pick here?
Yeah, so bullish on the IT pack overall. Large cap IT names is something which I've preferred over the last 2 to 3 weeks. Particularly, I think from the point when TCS was almost at 3,300 levels and Infosys, I think sub the 1,400 mark. So I think the space looks attractive even at current levels, and I believe the better change which is happening for the large cap IT names purely in terms of the stock specific moves is the move which we've seen for Wipro, because that's been a huge underperformer from the large cap IT space, and that stock has also made a very strong comeback. A 10% recovery for the stock so far in the last few weeks. So that itself indicates that this could be a good time where large cap IT stocks may not just rally up, but they may try and cover up the huge underperformance with respect to the mid cap IT names.
Well, thank you, Kunal, for that.